So welcome everyone. Thank you for participating. Kind of missed the in-person component of these seminars. The webinars seem a little flat to me. You don't get that interaction with the audience. I was just kind of sending out some chat messages, and it's just not the same as talking to people. Anyway, this is our second presentation in our Audit Committee Bootcamp series. We did one last month. Last month we did roles and responsibilities of the Audit Committee. It's on our website, and it's also on our YouTube channel. If you haven't seen it, recommend you go back and take a look at it. Feel free to share it with other people. Again, it's here as a resource for you. We put this series together because in working with nearly 300 nonprofit organizations, we get to see it all, the good, the bad, the ugly. And we wanted to run through with audit committees some of the best practices and how they should be looking at things. So today we're going to focus some time on the external communication. So like I said, last time we talked about the overall role and responsibilities, and we touched a little bit on throughout the roles, the role of working with the external auditors. And we also talked about some of the internal roles in terms of working with management in the company. We'll get into that internal component next month on November 4th. But today we're going to be focusing on the external component of things, kind of working with the external auditors, the RFP process, and everything else. So again, thank you for participating. I'm Ken Cerini, Managing Partner of Cerini and Associates. I'm joined today by my partner, Matt Burke. We both run the nonprofit part of the practice. And as I said, we work with about 300 nonprofit organizations, and we're one of the top firms in the New York metropolitan area in working with nonprofits. And I say that not because I want to kind of throw out a commercial, but I just want everybody to know that, again, we've seen a lot, and we've dealt with a lot of audit committees, and we've seen best practices, and we've seen where things have been effective, and we've also seen where things have been ineffective. So again, hopefully we can share some of that knowledge with you today. Throughout the presentation, we do encourage you to ask questions. Again, you have the ability to throw questions to the chat or the Q&A. We'll try to get through as many of the questions as we possibly can. We'll try to incorporate them into the normal flow of the presentation, but again, we can also jump in and do questions. As I said, we're going to be dealing with the external focus today. So we'll be talking a little bit about evaluating and choosing an auditor, the RFP process. So what should be included in your RFP, what that process should look like. How do you select the right auditors? I mean, there's a lot of different audit firms out there, and they all have different things that they specialize in. They all are approach audits different ways. So, what should you do in terms of picking the right audit firm? We'll kind of be talking about that and what factors you should be consider. And then we'll get into, once you do retain that auditor, things like the engagement letter review, the pre and post audit committee meetings, what you should be doing in terms of the review of the financial statements and other reports, and then any other interaction. So without further ado, let's kind of dive into this. Matt and I are going to kind of jump back and forth throughout the slides. So you get to hear both of us talk and not just me ramble on. So Matt?
I'll try not to ramble on myself. So hi, everybody, and thanks for joining. We start on page 5, the request for proposal process. We know it as an RFP. You may know it as that also. So really, this is the start of the process of trying to find a new auditor, or maybe even retain an existing auditor. This RFP process has become best practice. It's something that most nonprofits are using these days. Maybe 10 years ago or so, it used to be more of a handshake or an understanding between an organization and an auditor. They may just reach out to people they know and pick an auditor that way. It may just be a lot less formal. But with the New York Nonprofit Revitalization Act that made audit committees required, with governance being more of a hot topic day by day with the nonprofit world, we've seen the process of being retained on an annual basis and being hired, for a new client really become a lot more formalized, a lot more structured, a lot more well documented, honestly. So I'm going to walk you through what the start of the RFP process is, what's it all about. So in short, it's really the process by which information is shared with prospective auditors, and then really at the nonprofit organization level, that information comes back from the auditors, describing what the auditors are all about, what their experience level is, what the type of firm they are, what they do, how big they are, where they operate, things like that. Really, that process is then internalized with the audit committee of the board of the organization that's requesting the RFPs and the proposals. They go through that, they vet it out, they ask a lot of questions, may interview prospective firms. We see that that's happening more and more. And really, once that information is gathered and digested and churned through, the audit committee is really supposed to be in a position to make a smart decision about who they want to be their external auditors on an ongoing basis. So really this process, and it'll take a few slides to get through it because it is pretty involved. It takes some time, start to finish. It's probably a 2 to 3 month long process. And it's something that, like Ken said, we experience this a lot from many angles. Obviously, as a nonprofit accounting firm, we respond to a lot of RFPs, but having sat on audit committees myself, and Ken the same, we've been on the other side of the table too, where we're the ones sending these out. We're the ones trying to ask smart questions and really delve into what makes the prospective bidders tick so that we can make a smart decision for those organizations that we represent differently. So when is an RFP process really needed? There's several different cases and circumstances that would give rise to an RFP process starting. Obviously, if you're a nonprofit organization that has never been audited before and you need a new audit, a first audit, let's say you've reached and crossed over a certain funding threshold. If it's $750,000 or $1 million for the state, you will then need an audit. So you would that would trigger this process for you. You may raise less money than that, but you have a funding source that requires it. You may have an endowment that requires an audit. So all of that would be a trigger for a first RFP. Most organizations, though, probably the ones that are listening here today, have been through this before, have been getting audits year after year. So when would it be needed for those types of organizations when it's obviously not a new need? There's several cases there too. Oftentimes we see that organizations just simply outgrow their auditors, and that can be not necessarily a size thing, but you may have new programs that you bring on or you engage in that your existing auditors are not familiar with, and you may be looking for someone else that has that relevant experience and background. It may be a size thing. Maybe you have ballooned in size and you've been working with a relatively small nonprofit audit firm that doesn't specialize so much in this, and they can't handle it. They may decline the engagement. We've seen that where, we have let's say a sole proprietor or an auditor or someone like that doesn't really focus on auditing or nonprofits in general. Maybe they do a couple a year, and they may be representing an organization that has just ballooned, and the auditor doesn't feel comfortable doing the work anymore. So we've seen that would trigger an RFP process. There may be issues with your current auditors, obviously. Hopefully this doesn't happen often, but it certainly does. There may be disagreements about, approaching the audit. There may be disagreements about how to account for certain things. Auditors may be late with deadlines. They may have experienced turmoil internally. Something that we're seeing more and more of these days there's a lot of M&A, merger and acquisition activity in the auditing space. Some of our competitors are getting snatched up by larger firms, and that creates some havoc and chaos sometimes, where the relationship may be changing. So you may be working with a partner year after year, and then suddenly that partner is no longer with that firm or something like that. So things happen at accounting firms too that would give rise to the need for an RFP process to really see if that's still a good accounting firm for the organization to use, or if they should look elsewhere. And obviously it's just become best practice. So we've had certain clients that we've been the auditors for forever, really, at least it seems that way. And recently they go out to bid just because, it's something that it certainly doesn't hurt. It's a time commitment. It does take some effort internally to deal with, but it's always good to just see what's out there to make sure that you're properly vetting whoever you're working with. And what we're seeing is that whether you're looking to change an auditing firm for any specific reason or not, these RFPs are probably going out every 3 to 5 years on average, just to kick the tires, just to be able to document in your board meeting minutes and your audit committee minutes that you have properly vetted the auditing firm, even though you've had them and you're still happy for these reasons, and this is why we're keeping them. Or we're unhappy for these reasons, and this is why we're changing to whoever you decide to change to. So in terms of how often it should be repeated, it seems to be a 3 to 5 year cycle. What we tell our clients and prospects and whoever else we talk to is that really whenever you feel like there's a need to do this, you should. It shouldn't definitely be set in stone. You may engage a new auditor and not like them after a year. Just because you've gone through the RFP process and spent that time doesn't mean you should stick with that auditing firm for 3 to 5 years because you had a bad experience. So if there's a triggering event of some kind, or if it's just been so long, you probably should repeat this RFP process just to see what's out there, just to, like I said, kick the tires. And I think what you find is that doing this, even with an existing audit firm, you learn a bit more about them. And that can always be useful. It's always best to be armed with as much information as possible. In terms of timing for an upcoming audit, I would say all too often we, being on the bidding side of this, we get these RFPs very late in the game. So really, if you want an audit to run smoothly, you want to have an audit firm engaged before the year end in question. So we're in the process now of dealing with a lot of June 30 year ends, right? And we're getting proposals for 12/31 year ends, and that's good. If we were getting requests for December 31st, 2020 year end in December or January, we're already a little bit behind the 8 ball and rushing to get this thing done. And then in terms of starting the audit, we would have to rush everything at that point too. So what I like to say is start this probably 2 or 3 months before your year-end date. And that'll give you time really to send the RFP out. It takes time to find audit firms that you want to send this to. You don't want to send it to 100 firms. You want to really do a little bit of homework first to make sure that you're weeding out the right nonprofit audit firms to start. So that takes some time. Obviously, drafting up the RFP itself, which is a written document, usually takes some time. Gathering information to send to the prospective bidders certainly takes time too. We'll get into that in future slides here. And then obviously you want to give the auditors time to really look hard into your organization. So when we get an RFP, we want probably a couple of weeks really to just go through it, research online, gather whatever information we can get independently. And then we always have questions for the organization. And we would like the opportunity to speak with them about what's new, what's changed with their operations, what makes them tick, so that we're putting together a smart bid and we're factoring everything into what we should be, when we're walking into this. And then obviously once the proposals come in from the audit firms, you as an organization want time to go through that. Each of these steps takes a couple of weeks, and that's how I get to that 2 to 3 months. And ultimately, the voting and getting it past the board and everything else takes some time too. So don't delay on this. If it's something that you think you should do, it's definitely something that you want to do proactively. You don't want to do it after the fact, because that muddies up timing for the audit. It could lead to inefficiencies on the audit. It could lead to delays in terms of when you ultimately get your reports, and nobody wants that, obviously. And I just want to reiterate here, a lot of this, these are formalities. They should be documented in your committee, and then obviously the board meeting minutes. As you're going through this RFP process, make sure that's thoroughly documented, why you're doing it, how you're doing it, all the different steps of the way. And I'm sure Ken will talk about that too when he gets through his slides.
One of the things Matt mentioned is he mentioned the fact is, when is it needed? A lot of people, a lot of nonprofits have the, misconception that they have to change auditors every so many years. There's nothing within in most regulations, there's nothing that says the auditor has to be changed. It says that you should go through an RFP process. Again, as Matt mentioned, that's best practice. And again, I think as Matt mentioned, the time to change your auditors when they stop being value to your organization, and they stop questioning and digging and asking the right questions, and again, providing real value to your organization. So again, it's not that you should automatically be changing your auditors after so many years. There's no requirement necessarily to do that. It's really that you should be evaluating and going through the process. So when you go through that RFP process, what should you include? This is kind of what should be included in your RFP when you send it out to the audit firm. So give the audit firm some background into what your organization does. I mean, it's important for the auditors to understand, your mission, your values, your program, and you might have multiple funding streams and multiple programs. So kind of lay those out for your auditors so that they can really get a true understanding of how your organization operates, what the issues are within your organization, so they really can understand whether they have the expertise and they can kind of vet out and ask good questions. How is the organization set up? I mean, obviously there's a board of directors. Every nonprofit organization has a board, but what committees are there? So if you have an audit committee, because not every organization has an independent audit committee, some organizations, it's the board that functions as the audit committee. So what are the committees that are established? Who's the auditor going to be interacting with throughout this process in terms of the committee, and who the decision making is going to be taking place with? What sort of reporting during the course of the audit, and who's going to be reporting to? Are they reporting to the board? Are they reporting to the committees? How is it all going to work? What does the management/accounting department look like? It's always great if you can include an organizational chart that outlines what that accounting department looks like. That's very, very important for auditors, because again, if I'm looking at an accounting department and I can see how the department is structured and I can understand what staff are there, I get a better understanding of what that control environment looks like. I get a better understanding of what segregation of duties exist. I get a better understanding of how the flow works within the organization. Again, it helps me to provide a more realistic fee estimate. It helps me to ask more targeted questions, which is, again, what you're looking for, because, again, the more you have in place, the more your operations are working effectively, and the more you can display that, the more the auditor can kind of sharpen their pencil and come up to a fee that's an appropriate fee. What's the tax status of your organization? I mean, organizations typically have multiple organizations. You could have a single entity, you could have more than one entity, you could have for-profit components to your organization. So how is that all set up? What does the organizational structure look like? Again, just like I said, it's great to have a flow chart in terms of what your accounting department looks like. It's also great to have a flow chart as to the organizational structure. What entities exist? We often go out on bids, and as we're going through the bid process, we're trying to gain an understanding of what entities we're actually bidding on, and what those entities look like and what do they do. So if you can create an organizational chart in terms of organizational chart, but a corporate structure in terms of what the different entities that are involved in the RFP are, how they interact with each other, what each one does, because each entity could be doing something different. So again, I think it's important to kind of look at all of those pieces. Who are your primary funding sources? And how do you get your money? Is it coming from governmental agencies? If so, which are your primary governmental funders? Are you getting it from foundations? Are you relying heavily upon donations? Those donations that are coming in, are there restrictions with respect to those donations? Because if I've got donors who are providing permanent restrictions on my money, on the money coming in, and those are endowments, we're going to be looking at things differently there. So the more information you could provide to the auditors in terms of the detail of how you're funded, again, the better the process is going to be, the more intelligent the questions are going to be. What software do you utilize? Obviously, the key software is going to be your accounting software, so that should be kind of spelled out within the RFP. But if there are other software applications that kind of link into that accounting software, so if you have a billing software or a property management tracking software, or any of those types of things, include those in. This way, again, the accountant is aware of the different software you're utilizing. It'll also help because they may have experience in working with clients that utilize the same software. So again, it'll help you to kind of vet out those accounting firms a little bit better through that process. What's happening within your organization? Are there any major events or changes from last year? Because again, you're going to be providing copies of your last year's financial statements with the RFP process. So the auditors will be able to read through the prior year financial statements and get a good understanding of what transpired last year. But if something significantly has changed from last year, it's important that you share that with the auditors so that, again, they have a better understanding. So if there's been any significant changes in the overall financial condition, maybe you got a new grant, or maybe you lost a grant that you had in the past that's having an impact on you from a financial position or a cash flow perspective. Any new programs that you've entered into? Have you gone and borrowed new money? So new debt, such as the PPP loans and things like that. Any new leases you've entered into? What impact has, things like, obviously we're living in the COVID pandemic, but what impact has the COVID pandemic had on your organization? These are all things that are really important. And again, you can also utilize this to really understand the value add that an auditor brings to the table, because as they go through and they're seeing things that have changed, they may be able to provide some insight and thoughts to help you. As I mentioned, you want to provide copies of prior reports. It's amazing how many RFPs we get, and there's nothing attached to the RFP in terms of information. So the things that we're definitely going to need is we're going to need financial statements. Any auditor that's kind of bidding on the job, they're going to need a copy of the financial statements. They're going to need a copy of any management letter that's been issued. If there are any special reports or compliance reports or uniform guidance, so if you get over $750,000 of federal funding, you're required to have a uniform guidance report. There are a lot of different special reports that are required. So any of those types of things, a copy of the 990 that's filed, and a listing of the states that you file in. It's important to really understand what states the 990 is filed in. So if there are other states other than New York, and you're going to be requiring the auditor to bid on and provide tax services within those states too, that should be listed. If you have any cost reports that are prepared and that either the auditor is going to need to prepare, the auditor is going to need to opine on, you should include copies of those cost reports so the auditors can see what programs and what's out there in terms of the cost reports. Again, it's also, we talked about some of the major events and changes. It's great if you can also include some interim financial information so that the auditors can really get a feel for what this year looks like compared to prior years. Outline the deliverables that you're requesting from the auditors. So you want an audit of the general purpose financial statements. There's a uniform guidance audit. There's an audit of the consolidated fiscal report, tax filings in these 4 states, a board presentation, management letter. Maybe there's a pension audit that needs to get done. Again, we get RFPs all the time, and we have to ask the question, do you need a pension audit? I think that's something that if you can spell that out in the RFP, that would be great. Timelines and deadlines. I think when you look at timelines and deadlines, that comes in 2 components. First of all, what's your timeline and deadline for the RFP process? And then also, when do you typically have your audit done, and when would you be looking for your auditors to prepare that audit? So, if you're looking for the audit to take place in February, that could drop into prime time for auditors, and that is going to kind of be factored in terms of whether the auditors have proper staffing patterns to do it during that month and everything else. If you can wait until, let's say, May to have your audit, and you can say that in your RFP that we typically have the audit done in May, or we're okay having the audit done in May, that could actually bring your price tag down a little bit, because auditors might be less busy in an off month like in April or May, and could result in helping to keep the fee down in terms of the cost of the audit. So things like that you should be considering and thinking about. Also, who within the organization should the auditors reach out to if they have any questions or issues? And then also, who do they send the RFP to when the RFP is being sent in? The other thing is, what format do you want that RFP in? Do you want a hard copy? Do you want it just emailed over? If it's hard copy, how many copies need to be sent? So again, I think having that sort of background is very, very helpful. We're also starting to see, and this is in government, we definitely see it, but in the nonprofit, we're starting to see it a little bit more, where organizations are requesting 2 RFPs. They're requesting an RFP regarding the technical components of the audit, and they're requesting a separate RFP with pricing. And I think the reason, and Matt will talk about this a little later, but I think the reason they're looking for that is because this way pricing doesn't become the primary factor in terms of the decision-making process. And again, I think we'll talk about that a little bit more. Matt?
Yeah, and just to point out here, this is a mouthful, obviously, and it's a bit overwhelming. If you need a standard template for an RFP, if it's an organization that you represent and you're looking to do this, you don't have to build it from scratch. There's a lot of resources online, a lot of really good resources. Obviously, Google's everyone's best friend these days, but we're your friends too. If you need any help with any of this, we'd be happy to share. We have our own standard templates that we see a lot that we think are really good. We have others that we think are really poor. So having seen a lot, we can definitely be a resource here too with help setting you up on this. I want to talk about, or start to talk about really some of the selection criteria now, and actually starting the RFP process. Now that we know what it is, now that Ken described what goes in there and how it goes out, I really want to flip the order here and talk about the point of contact. That's really important. This is a very arduous process. It's not necessarily something that can be done quickly. It takes thought, it takes effort, it takes a lot of emails, a lot of phone calls, a lot of potential interviews and things like that. So really what we usually see is that the point of contact for the RFP process, the quarterback, let's say, is usually someone within management, because they're the ones that have access to the financial reports. They're the ones that are handling the bookkeeping, and they're overseeing all of that. And they're really the ones that can answer most, if not all, of the questions that the bidders will have. You know, serving on an audit committee, you are a little bit detached from the day-to-day. You may not know exactly what's going on. You may not be in a position to answer all the questions that we'll have, because we are going to pour through the financial statements and whatever financial records were provided, and we're going to have hopefully a lot of smart questions. So really, it's usually the CFO or controller, or someone that's in that capacity. I know there's a lot of titles out there in the nonprofit world: director of finance and administration, whatever else you want to call that person. That main finance and accounting person is usually the person that's quarterbacking and leading this charge. And really, their role in this process is to obviously develop the RFP, make sure it's blessed by the audit committee before it goes out, send it out to everybody that you want it sent out to, accumulate the questions that will invariably come back. You should hear back from the auditors that you're sending it out to. If anyone doesn't ask you a lot of questions and want to talk to you, then either you've done a really good job of supplying them with everything in the RFP, or maybe they're missing something. Usually there is an individual discussion with each bidder, or at least there should be. I know when we're bidding, we like to have a conversation with management, maybe even the committee too, just to get a sense of how they operate. You know, it's good to hear voices and see faces these days, because this is a relationship. You know, this can't be taken lightly. It's definitely at arm's length, and there's independence, but your auditors are supposed to be a resource. They're supposed to be people you can turn to. They're supposed to be people you, dare I say, enjoy working with, you know, as much as you can enjoy working with auditors, people that are, you know, digging into your records and asking a lot of annoying questions. But I think it's good both ways to really get that face-to-face. And this point of contact will be the person that the bidders will be interacting with more so than anybody else throughout this process. So that person supplies the information to the bidders. They field the questions, like I say. What we're seeing more and more these days is after the RFP goes out and after the bidders have an opportunity to ask their questions, and I think this is a smart thing, the organization is sending out a list of those questions and really a summary of, okay, this is what everybody asked. This way, all of you auditors or potential auditors are on the same page, on a level playing field. This is what we were asked from everybody. Here are the answers from everybody. So here you go, guys. Everybody has what they need now to bid. You'd want to probably coordinate interviews. So as point of contact, you know, ultimately, we'll get to this part of the process, you know, a few firms will be selected. You don't want to interview 10 firms. It'll take you forever. It'll be even more burdensome than this already is. But obviously, you'd want to set up these interviews. You coordinate these interviews and really ask more questions too. So this point of contact is probably the person who's going to be dealing with the auditors more than anybody. So they likely do not sit on the committee. Oftentimes they don't. But you know, while they're not making the decision officially, I think their input is very important, because they are the ones who, one, they deal with the current auditors if you're looking for new ones, and two, like I said, they're the ones that'll be interacting with us on an ongoing basis and really providing us with everything, and they're going to be stuck with the auditor, you know, for as long as they're together. And it seems only fair that they have some input in the process and they have some influence over the decision-making process there. So flipping back now to the first little flag here, sourcing solicitations. It's important not to send these RFPs out to everybody in the world, because like I said, it's an arduous, it's a burdensome, it's a process that takes time. And the person here, the point of contact, is usually a very busy person with their day-to-day lives at the organization, right? If it's a CFO or a controller, or if it is somebody on the audit committee, chances are they have a day job, right? And they can't be dealing with 20 audit firms that they send this out to. They just don't have the time to adequately service that need. So what we're saying is, you know, usually you want to limit the number of bidders, maybe no more than 10 or something like that, maybe 6 to 8, as a first shot to get it out there to firms that, on the surface seem qualified, that you've heard of, that, maybe you have some other affiliation with that seem reputable enough, and see what comes back. And then, whittle it down from there. The easiest way to identify potential firms we're finding is obviously existing contacts. So everybody on the board or an audit committee, even in management, they've dealt with accountants and auditors at some point in their lives, and they've probably had good experiences. They've probably had some not so good experiences, and their input there in terms of setting the list can be important. What I would say, though, should take place is a lot of times people on the board, they may not have a nonprofit background, and even on an audit committee, you may come from other walks of life in for-profit, or let's say in legal or in banking or something like that. Auditors for nonprofit accounting firms for nonprofit organizations should be nonprofit accounting firms. There's a lot of firms out there that specialize in different things. I wouldn't have a real estate audit firm look at my big complicated nonprofit. It just doesn't make sense. And similarly, I wouldn't have a nonprofit accounting firm like us, handle anything that's SEC or publicly traded. It's just not something we deal with. So you'd want to vet that list that your existing contacts on the board, within management, whoever, are providing. Obviously, I said it before, and I am a Google shareholder, so shameless plug. But Google is everyone's best friend, right? You can go online and Google and type in certain keywords that apply to your organization, whether it's nonprofit, audit, or pick a funding source you deal with. Let's say you deal with, like Ken's area, special ed, so New York SED accountants. So you'd want to whittle down the list even more there to find the ones that really are focusing on the areas that you as an organization focus on. So that can be industry, obviously location. If you're located here in New York, you're not going to work with a regional firm in Ohio. It just doesn't really make sense, because you do want some sort of personal touch. No offense to Ohio. You may want to look at trade groups, or you may belong to trade groups where you have contacts with other accounting firms. These nonprofits tend to swim in the same circles, right? So nonprofits in general, but then more limited to the industry area that you focus on. So if it's education, or if it's arts, or if it's housing, you probably know other firms, firms in those areas, other organizations certainly in those areas that do work with other accounting firms. So maybe speaking with your fellow nonprofits that are similar to you, and see what their experiences have been, see who they're using, get information that way. But obviously you can see this would take some time to put together the list. If there's other membership groups or things like that, or other similar nonprofits out there, all of that feedback is good in determining the list of who should be sent the RFP. Funding source recommendations too. So if you do have funding sources that you work closely with, whether they're on the government side and have very specific requirements, or whether they're on the private side and maybe they're big major donors and you really value their opinion, you may want to ask them, because maybe they have contacts in the nonprofit auditing world that applies to you. And they've probably had experiences with accountants too. Everyone's had experiences with accountants. So we work a lot with government-funded agencies, and government-funded organizations get money from, obviously, government sources. So we've actually developed relationships with some of those government sources. So they know us, they know the quality of our work, and we would welcome their recommendation or input about us. And I'm sure other firms that we compete with and work with would say the same thing. So really, you're pulling from all these different sources that you have. To summarize: board, management, Google, look around yourself, funding sources, other nonprofits, all are very good resources for identifying which firms you should send the proposals, the RFP out to. Really, what I would say too is sometimes we see token RFPs come out where, we don't really think we have a shot, and maybe we know somebody or something like that. I would say don't really do that, because, the RFP process on both sides is very time consuming. It requires a lot of thought and creativity and things like that. And if you're really not seriously considering a firm, I wouldn't really involve them in the process. So, that's why I think you should keep the list not too long, to really not burden yourselves and really not to waste anybody's time on the other end too.
So choosing an auditor. As Matt mentioned, auditors should be a resource that you can bounce questions off of. I mean, yes, we have to remain independent, but we're also a tremendous resource. We're involved in a lot of different, most audit firms that work within the nonprofit sector, and specifically within different funding sources, really know those funding sources well. You want to make sure that when you pick a firm to work with, that you pick one that has a deep understanding of the overall nonprofit sector and nonprofit accounting, but also the funding streams that you're working with, because each funding stream has different regulations. Each funding stream has different requirements. And you want to make sure that, when you pick an audit firm, that audit firm knows as much or more about the funding streams and the revenue that you're generating than honestly you do. So by having that ability to work with a firm that really gets it, that understands, that's deeply entrenched within a specific industry or funding stream, that's very, very helpful, because they're going to have concentrated knowledge. The other thing you want to find out, in terms of when you're going through that process and asking questions, because again, you should be asking questions of your auditors, potential auditors, just like they're asking questions of you. You want to find out what experience they have, not just at the partner level, but also at the staff level that's going to be working within the engagement. So again, if you are, receiving special funding from a governmental source, what's their experience with that funding source? If you have foundation grants, or you have restricted donations, I mentioned before, endowments. If you're working with endowments, then, hopefully the firm that you're working with has a keen understanding of the New York Prudent Management of Investment Funds Act, NIMIFA, because that rules endowments and how those endowments work. And they can actually provide you with insight if you're not doing things correctly. Again, the goal of working with a industry specific or knowledgeable auditor is, when they come in and they do the audit, they're going to be looking at things clearly from a fiscal perspective, because that's, a main component of the audit. But they should also be looking at things from an operations perspective and from a compliance perspective, because if you're doing something wrong, you'd prefer to hear it from your auditors than having a governmental agency come in and do an audit of you and request the monies back. So again, when you're going through and you're asking questions, and they're industry specific type questions, what sort of testing are they doing? What are they looking at from a compliance perspective? And when we go in and we do our audit, we're actually talking to compliance officers. We're talking to quality assurance folks, to kind of find out what they're doing. We're going back and we're reading the grant letters to see if there's restrictions, and if there are restrictions, we're looking to see if the board is doing what the board is supposed to be doing with respect to vetting and evaluating under NIMIFA the use of those funds. So there's a lot of components that come into this. And again, as Matt mentioned, if the firm is not versed in these items, yeah, you may get an audit done. Yeah, you might get an opinion and a financial statement that looks good. But there's really, it's like the difference between like a mechanic just lifting up the hood and saying, yeah, there's an engine there, or, someone who really understands how to work with that engine. Government regulators, when you have things like uniform guidance, if you're receiving federal funds, how many uniform guidance audits does the firm do? Pension retirement plans, do they do pension and retirement audits? How familiar with them are they? How many of them do they do? The Department of Labor has done many, many studies, and those firms that do very few pension audits make a lot of mistakes. Those firms that do more pension audits are more likely to be getting things right, and the Department of Labor could be really nasty when they come in and do audits. If the organization has a cost report requirement, how familiar is the agency with the cost report and the reimbursement methodology behind that cost report? Again, we work with a lot of agencies that have cost reports. We understand the nature of that cost reporting functionality. So when we're going through and we're doing our audits, we're also looking at how organizations could potentially maximize the revenue streams that they're generating. So you can have those open communication and dialogue with your auditors. And it's not just us, there are other firms that have this knowledge too. Those are the ones you want to work with, ones that really have a deep understanding of the agency and the funding streams that you work with. I mentioned the restrictions on contributions and endowments, reporting rules. What sort of special reports are required? What supplemental schedules are necessary to meet reporting requirements? Again, if you're we've seen a lot of financial statements that get issued where you have a consolidated financial statements without consolidating information. Consolidating information is extremely important because it could help with cost reporting, could help with tax filings and everything else. So it's make sure that the firms really are getting that. In terms of new accounting rules, how well is the accounting firm staying abreast of new regulations that are impacting the nonprofit sector? There's a lot of accounting rules that just impact nonprofit organizations, or rules that don't impact nonprofit organizations. And if you're working with a firm that doesn't understand that, they could be forcing you to jump through hoops that you don't have to jump through, or you're not dealing with disclosures that are needed to be disclosed. And that's important because when you're dealing with your funding sources and you're dealing with banks and such, and they look at your financial statements, and if there's something missing from those financial statements, that could have a bearing on your ability to get funding. We just recently had a situation where there was an educational organization that sent in their financial statements to the state education department, and the state education department cited them on the fact that the audited financial statements didn't include certain disclosures that were required. And they were forced to switch their accounting firm because their accountants just didn't know that this stuff was necessary. So again, there's the PPP loans and how those PPP loans are treated, because they're treated differently for nonprofits than for-profits. There's new revenue recognition rules. There's rules regarding the recognition of contributions. So again, you want to work with a firm that's knowledgeable about all of those things. Also, from a tax perspective, there are special tax considerations that you need to think about. I mentioned before, multi-state filings, you have prohibited transactions, you have unrelated business income tax issues. So you want to make sure that, you have the ability to bounce questions off someone, because as I started off this, your accountant should be a resource to you. Your accountant should be able to, or auditing firm should be a resource to you. They should be able to answer questions. We love it when we have relationships with our clients where our clients reach out to us during the course of the year and ask questions, because then we've got this good vetting of issues so that we know when we get in at the end of the year, the books and records are going to be a lot cleaner. We understand that, management is able to identify issues as they're arising. It gives us more comfort over, the management's ability and everything else. So it's really, really important, again, to be able to have that interactive communication, and that can only work if you're picking the right auditors, and those auditors have the experience that they need to have.
And really what we'll say is that your auditors are only as good as the people that you're actually interacting with. So you could hire the biggest, fanciest accounting firm in the world, but if you get someone there that isn't good, that isn't responsive, that isn't meshing with your personality, you're going to have a bad experience, right? And if you hire Cerini and Associates, you're not working with 50 people. You're working with, a handful. So it's important when you're choosing an auditor that you know specifically who it is you're working with, because it's not just a name, not a firm, it's people. How many of those people and what those different people do and what they plan on doing for you and your audit. So the team composition is important. So who's assigned to your prospective audit? What type of depth is there? How many people? Are there fallback options for times when people are on vacation or turnover? The public accounting world it's a bit of a grueling profession. Historically, there's very high turnover rates for a lot of firms. Some are lucky that they don't really deal with that as much, and happy to say we're in that category. We're a little bit of a different accounting firm. So it's important that you have a team assigned to you and not just be one or two people, and that really when you're going through and vetting out firms, you really want to get to the heart of, okay, who's the partner assigned to my account and what is that partner doing? Who's the manager level person? And there's a lot of weird titles with accounting firms: manager, supervisor, director, whatever that person is. What is their role? Who is that? What are they going to be doing? And who else is assigned to my engagement? Will there be senior accountants? Will there be staff accountants? Will there be brand new people? Will there be interns? Who is it? Who am I working with? So I think you really want to get to the heart of that. And this would come back probably more in the interview phase when you're dealing with firms that that they've submitted a nice bid and it seems like they have the right experience and background. Then you really want to get into the heart of how will the audit truly function. I say partner involvement here. It's very important because you'll speak with partners as part of the bidding process. They're typically responsible for sales or the development of the firm and bringing in new business and things like that. You want to understand, though, if you're ever going to see that partner again, if they're going to really be actively involved in the engagement. Ken Cerini's been doing this for 600 years. I've been doing it for 20 years. We bring certain level of experience to an engagement and an audit that a brand new person doesn't. Managers in the accounting world, they probably have between, let's say, 7 and 10 years experience. You want them involved. You want them doing some level of original work. You want them reviewing the work of the underlings, so to speak, that are doing the grunt work on an audit. And you really want to make sure that they're looking over definitely the risk areas of your audit, government sources, compliance, things like that, but also really everything, and making sure that they're involved in keeping it a smooth process for you. Because you can have a very clunky audit if you're working with brand new kids who don't really know what they're doing. So there's always some level of new staff working on jobs, so to speak, but they really should be properly supervised. They should be properly reviewed. And you want to make sure that the higher levels that you're working with in a firm are actually spending time on your engagement and aren't just showing up once a year and, I like to say, shaking hands and kissing babies. It's more than that. When we get involved with an audit, I know me personally and Ken definitely too, we want to roll our sleeves up. We're spending a lot of our time providing original service and original work to our clients because we think we have to. It's who you're trying to hire. It's why you're bringing us in as a firm. And I think it's only deserving that you get that special attention from anybody that can really help your organization. And that starts with the partners and the managers. You want to ask about turnover rate of a firm. When you turn over staff that are assigned to your audit, externally from our standpoint, it creates inefficiencies for us, obviously, but also internally, it can create havoc for you. So what I like to say is that organizations should not be training their auditors about how they should be audited, right? That's the job of the auditing firm, and you shouldn't have to do their job for them. So if there's constant turnover and there's a lot of people coming and going and layoffs and things like that, M&A creating layoffs or weak financial reasons or investigations or things like that, creating layoffs, or just a lot of firms, and it's maybe not in the nonprofit world, but a lot of larger firms, you hear of 80-hour weeks and things like that, and people only put up with that for so long and they leave. So that there's a low retention rate, a high turnover rate for a lot of firms. You really want to understand if that's going to affect you, because if there is a constant churn there, it will frustrate your staff that are dealing with the auditors. It may delay things, and it may just make for a less positive experience all around. I don't want to go in too much because we're a bit behind time. So
I just want to bring up one other thing. I mean, also, it's important to understand what sort of tech review, quality review process takes place within the firm. So, in addition to having the partner and the regular team looking over things, what's the tech review process, quality review process? Who's doing it? Do they have to send it to another office? Is it being done in-house? How long is that process going to take? Because we've heard, again, stories where that process has kind of delayed things. So you really want to gain an understanding of how that process works too. Use of technology. And again, as Matt mentioned, I think we have like about 11 minutes left and about 11 slides left. So we're going to try to pick up the pace here a little. You want to get a good understanding of the technology background of the firms you're working with. Do they have an IT auditor on staff? Can they speak the language of, because if you think about it, IT is so pervasive in every single audit that takes place. So you really want to gain a good understanding of whether they have a strong understanding of the IT components of the engagement, whether they can review your IT as part of that audit process. And then also in terms of internally what they do. Are they electronic or are they paper bound? Are they doing electronic work papers? They have electronic binders. What accessibility do they have to work papers if you have questions throughout the course of the year, or do they have to wait until they get back into the office before they can answer them? How are they interfacing with you? Do they have Dropbox or shared files that you can securely place information in, and you have a nice flow of information back and forth between you and the auditors? If their signatures required, can they use for like confirmations and stuff? Can they use DocuSign, Adobe Sign? How are they sending out confirmations to streamline the process? What sort of security and access, especially in today's environment where you have a lot more people working remotely today? What sort of security access exists? what sort of assurances that can they give you? If you're government funded and you're working with individuals in the healthcare or protected information, what sort of HIPAA compliance, and are they able to sign a business associate agreement? So all of those things come into play. What sort of remote working abilities do the auditors have? Do they need to come on site, especially with the COVID-19 pandemic? We've been doing a lot of the audits remotely these days. But how flexible are they in terms of being able to work remotely? Can they come on site? Will they come on site? So all of those things are things that need to be vetted out in terms of how you're going to be approaching your audit this year and maybe in years to come, because who knows what the world is going to throw at us in the future.
This next slide goes along a little bit with what I was saying earlier, in that the personal touch is important, and the demeanor of the audit firm and the people that you deal with is important too. So how do they handle certain issues, and what's their communication style? I'll run through this as quickly as I can. There's ways that auditors report findings, let's say findings to the organization. And the one that's really most well known is considered a management letter. That's supposed to be the auditor's written ability to communicate serious findings, concerns, recommendations, things like that. Does everything that they find show up in a management letter, or is it just major items? What we see often out there is that management letters may have very minor comments about $200 things, very immaterial items find their way into the management letter all too often. And what we're finding is that donors, government sources, they're now asking for these management letters. They become more sophisticated in understanding what happens with an audit. And they're picking on nonprofits for these minor comments that auditors are putting in written management letters. Something that we do is we try not to put anything in that written management letter unless it absolutely has to go there, unless it's a real serious finding. So you want to understand that. If an auditor finds something and they want to cite you for it in such a way, how does that come across? Does it all have to be in the management letter? Can they communicate it to you verbally? Can it appear in a board presentation or something like that? So we tend to reserve minor comments for board presentations that are not public documents. They never will be. It gets shared with nobody outside of that little meeting or that room. So that's a way to kind of mitigate the potential risk and exposure unnecessarily that could result from a lot of comments in a management letter. So definitely want to understand that. In terms of adjustments and severity of findings, things like that, auditors' best friends is materiality. So when you hire an auditor, they're not looking at every nickel and dime, because they'd never leave your offices and your audit fee would be 10 times what it is. They look at materiality as determined by their professional standards and things like that. So some items are just so small that they don't audit because they can't, or it wouldn't be efficient to. Some adjustments similarly may be so small that they don't have to be made, or they can be blown off, or they can be communicated to management to record and something like that. So you want to get to the bottom of how nitpicky an audit firm may be, because nothing drives CFOs, controllers, bookkeepers, accountants more crazier than $5 adjustments, $200 adjustments on multi-million-dollar organizations. So I don't know how auditors really look at it in that level of detail without making literally zero money on an audit. That's certainly a consideration, but you want to understand that too. What types of adjustments should you expect? What type of materiality levels do they use? Obviously, you want a good, clean audit. You want them to do a real good job, but you don't want to be over audited, and you don't want to be picked apart over little, very minor things. Responsiveness in this day and age is very important, especially with people working more remotely. Returning emails within a day, is that a company policy that they have? Do they return phone calls? How are they with deadlines? If you have deadlines and you're giving them everything that they need, will they adhere to them? Will they sign up in the proposal process and say, yes, I will meet that, let's say, November 15th deadline, assuming that you give us everything that we need? How long does it take them start to finish to complete an audit? It usually happens in phases: a planning phase, a quote fieldwork phase, which may or may not be in the actual nonprofit's offices these days, and then a reporting phase. How long do each of those processes take, and how long does it take to have everything wrap up? And then personality, accountants can be people too, right? How comfortable are you working with them? Do your personalities mesh? How do they look at independence rules? So we can only do so much without crossing lines of independence and prohibiting ourselves from doing audits. But there is still a lot we can do to help an organization without impairing that independence. So you might want to get a feel for how the auditors feel about that line. And obviously they don't want to cross it, and you don't want them to, but what can they do to help you without compromising that independence?
I think the thing you have to remember is that this is an interview, And you need to treat it as an interview. You need to ask the questions. You need to kind of vet it out. I think a lot of times, when you set up that interview with the audit firms, a lot of the audit committees, when they set the time parameters, they'll set like 20 minutes or a half an hour, and you're thinking about hiring someone to do an important job for you, an annual audit. And the question is 20 minutes or a half an hour enough time for you to kind of go through that process and vet that person out, or vet that firm out, and make appropriate decisions. The other thing, Matt was talking about in terms of the, communication methods for findings and board reports and, all that verbal stuff. I think one of the other things that becomes important is also, what do those communications look like? So when they're doing a board presentation, they're looking at financial information and everything else, how much is the industry knowledge that they have, and this comes back to the value adds that we're talking about now, but how much does that industry knowledge that they have come back through those board reports and that presentation that's being made to the board, in terms of being able to really share some really good information with the board? So again, the firm should be a resource to you. How well do they follow industry trends, and how do they share that information with the audit committee? What other things do they have background in? If someone's working in the nonprofit field, you should be able to, as an auditor, you should be able to bounce a bunch of different things off them. I mean, I field questions all the time about fundraising, compliance-related issues, department makeup, and things like that. Those are all things that we should be able to, or your firm that you're working with should be able to kind of field questions on. How well do they disseminate information back to the organizations? There should be a flow of information, whether it be through blog postings or, webinars like this, or anything else, just the flow of that information back, so that the firm is keeping you as the auditee informed in terms of what's going on. What additional resources do they have? If you need additional services, are they going to be there to be able to provide those additional services? Again, as Matt said, providing that doesn't impair their independence. How well do they stay on top of changes in accounting standards and rules, or changes in regulations from your funding sources, and how is that information pushed back to you, and what can they do in terms of adding real value to the relationship? So again, if you have a firm that really understands how cost reporting works, and they can review things and say, okay, based upon how you've placed costs on your cost report, you're leaving, $40,000 on the table. Again, you'd like to know that if you're doing something wrong and not maximizing the potential. What sort of other resources can they bring to the table for you? Do they have a connection of folks that they work with outside of the accounting world? And how are they looking at your operations to determine whether there are other ways they can help? So if you're paying health insurance of $300,000 a year, has anybody said to you, hey, have you looked at your health insurance? There might be ways through, different high deductible plans and things like that you can save $100,000 a year. Those types of things, and then put you in touch with someone who can help you. Those types of conversations should be taking place during the course of an audit, and you should be working with a proactive firm, business-oriented firm. And then how available are they during the course of the year to answer questions? And when you do call them up with a question, do they have like a little clock on their desk that they hit and start charging you for the time that you're spending with them? Those are things, again, that should be vetted out. You want to work with a firm that's not going to be year-end auditors, but are going to be a year-round resource to you and the organization.
Ken mentioned answering questions and hitting the clock for extra bills, and we're getting into fees, which is obviously an important consideration. A few thoughts on this. One is that the lowest bidder should not automatically be the winner. You have to make sure that you're getting a quality audit. There are certain rubber stamp type firms out there that we think do not do the proper job. I don't understand how they get peer reviewed and pass and come out cleanly. But if they're able to charge half the fee of what ordinary firms are that are well experienced in the field, that might be a red flag for you to think about. You may ask for multi-year commitments. You may ask in the RFP, what are the annual increases typically? You want to prevent yourself from a bait and switch type situation where you get bid, let's say $20,000 in year one, and that goes up to 30 in year two. You want to make sure that as long as business remain consistent, as long as operations aren't really changing too much, and as long as you, as the auditee, the organization, are providing information in a timely fashion, that you won't be shocked with any surprise increases. Budget overruns are important. We like to say that we don't really have surprise bills as a firm. And to put it in perspective, let's say that we bid $15,000 on an audit. Chances are, when we look at the value of our time, the hourly rates and things like that, we're probably spending $25,000 to $30,000 in time. Now, that doesn't mean we charge you an extra $10,000 or $15,000, but you want to make sure that whoever you're contracting with is not going to do that. So if they come in and they have a nice fee for year one, and then they come back and say, well, we took a lot longer on this audit than we thought. Here's an extra bill for X dollars. You want to look over the engagement letters to make sure that the language in there is such that they can't automatically do that, that the audit firm has to really confer with you and make sure that you're comfortable with additional fees if they're deserved and warranted. If something happened during the audit that wasn't factored in during the RFP process, or information wasn't shared, and it's only fair that more time was spent, more dollars should be paid to the auditors, that makes sense. But you really shouldn't be getting surprise fees for budget overruns, as they seem to be called in our field. And then special requests, like Ken said, if there's anything that you ever need from the auditor during the course of the year, will the clock start? Will you have to pay extra for that? How much is included as part of the audit? We always include some level of ongoing support. If you have questions about how to account for something during the course of the year, we're not going to charge you for that unless it's really involved and we have to spend hours and hours researching, and unless it's really specific to you. It's something we don't know and we should know. You're not going to be charged for that. And I think that's really typical for the field, but you want to make sure that you're asking these questions and understanding what is and is not included in the audit. In terms of communication style, Ken mentioned this, the board presentation format. Is it graphical? Is it interactive? Or is it just someone reading off of the financial statements and putting everybody to sleep? I think it's important to understand that. And then exit meetings, other exit meetings held with management to go over the findings, the adjustments that maybe were identified during the audit, make sure everyone's on the same page with that before those comments may find their way into a management letter or a board presentation or something like that. Just want to make sure that you're factoring all of this in up front when you're talking to your auditors during the RFP process.
I do want to apologize. We are going over. We're probably going to be a few more minutes, so I'm sorry about that. Peer review, I'll make this really quick. Every accounting firm that does audit work has to go through an audit themselves every 3 years, where another accounting firm comes in, looks at the quality of the work that they do, looks at making sure that they're following industry standards and everything else. It's important because you get a good understanding of whether the firm is a quality firm and whether they're doing things right. You should always ask for a copy of the peer review report. You want to look at it. You want to see if there are any material weaknesses or significant deficiencies within the report that are outlined. That might mean that there are issues with the overall work that the firm is doing. And again, it comes back as Matt mentioned, the lowest price isn't always the best price. You want to make sure that you're working with a firm that has quality standards in place. When you're checking, everybody should, every RFP request, you should be asking for references. You want to get a good understanding of the work they do. You want to check the references that are provided. We get a lot of RFPs that ask for a listing of any or the top 5 clients that were lost in the last 3 years and why you lost them. So you get a little bit of an insight into what's going on there and what some of the issues that the firm might be running into. Take a look at the references. Are they in the industry that you're in? Are they around the same size as your organization? Does the firm have the ability to handle a nonprofit that looks and is structured the same way you do? If you've got a proposal and the references that are given are huge and you're small, or the references that are given are small and you're huge, they may not be compatible, and that might be an indication that the firm isn't really the right fit. And then again, what industry involvement expertise is the organization involved in? Trade groups, membership organizations? How are they staying on top of what's happening within the industry? You also want to look at things like, reputation of the firm. Have there been any sanctions or lawsuits? Those types of things, come into play also.
So now, assuming you've gathered all the information you need to make a decision, how does that decision-making process take shape? Really what we see is a lot of organizations develop a scorecard. It sounds numerical, but it doesn't have to be, but really a general sense of what's important to you when deciding which auditor to use. And there's certain factors that obviously come into play. It's the experience level, it's the staffing, it's the people that you've dealt with. There's certain name value that's just unavoidable. You know, larger firms that have been around for a longer time just seem to give more inherent comfort to people from time to time. Price obviously is important. So you as an organization have to see what matters most. You know, if you're well-funded, maybe price is less important. If you're brand new and you don't have a lot of money to spend on this, maybe price is more important. Maybe experience, you're a simple organization, so that's not as important to you, you know. So you have to, as an organization, as an audit committee, determine what's most important and how to weight that in your own minds, you know, as you go through and look through the bids that came back. You definitely should do interviews of a handful of firms, maybe 2 to 4, you know, that really came out well with their proposals and the price seems okay and the experience seems right, because you really want to get to the heart of, like I said earlier, who you're working with, how they operate, and you want to be able to ask them all of those questions that you should have at this point in time. You know, obviously then you'll assess all the different factors. You'll see, you know, who you feel most comfortable for. Usually there's a vote at the audit committee. Sometimes it ends there and the audit committee, you know, technically hires and signs the engagement letter for the firm. Sometimes the audit committee may blow it by the board and say, okay, we as the audit committee recommend to the board the appointment of XYZ company as the auditors and so on. So there's always a vote that has to take place. And again, I want to reemphasize, make sure this is all very well documented in your meeting minutes so that it shows that the vote took place, and you know, whoever voted yay or nay or abstained, that should all be documented fully in case this ever comes up and has to be questioned. And then, you know, inform the bidders, send out an email, send out a letter informing them, you know, if they were or were not chosen. If they were, obviously it'll be a different conversation. If they were not, you may want to tell them why. You know, if we don't win a bid, we always ask why. And I think it's just helpful feedback, you know, in a professional courtesy type of way. And then the succession process should then start. So you've chosen an audit firm, whoever it is, assuming it's a new one here. If it's not a new one, there's no succession process, but there is a process with onboarding new auditors. Really, it starts with you have to inform the prior auditors, tell them, hey, we've chosen a new firm. Please cooperate with the new firm and whatever else they need. They will likely give you some sort of NDA type form that you have to sign, instructing them that they can formally share documents and work papers with the new auditors. And then the new auditors themselves will contact the prior auditors to try to get their cooperation. Cooperation is not always ensured, though. You know, our experience is that some firms are more combative. Some firms charge the organization, it's sort of a poison pill, I like to call it. So if you leave us, you have to pay $1,500 for us to share work papers with the new guys, something like that. So we don't really like that. We're starting to see a little bit of it. I would say it's not common, but it is something to be aware of, and don't be surprised if that's something that you see if you do, in fact, switch auditors. But new auditors can get a lot of information out of prior auditors. And if that information isn't provided by prior auditors, chances are your management or you as the board and the audit committee will have to provide that information to the new auditors. So you really want to do your best to ensure a smooth transition, be very professional, very you know, almost flowery with leaving the old firm to go to the new one, because you want to make sure they're leaving with an okay taste in their mouth, so they will be incentivized to work and cooperate with the new auditors. I know I shouldn't have to say this, right? People should just conduct themselves the right way, but unfortunately it doesn't really always work that way.
Once you work with a firm, the first thing the firm should do is get you to sign an engagement letter. The engagement letter has certain components to it. I'm not going to get deep into each one of these components because of the interest of time, but the engagement letter lays out what management's responsibilities are in terms of the audit, which is to fair presentation of the financial statements, design and implement internal controls, access to staff, access to information, all those types of things. The auditor's responsibilities, primarily to plan and perform the audit. Again, as Matt mentioned, we work off materiality. We don't look at every single transaction. We evaluate the system of internal controls, but don't form an opinion on that, on the controls themselves. We look at compliance issues and things like that. It should discuss the timing of the engagement and the deliverables that will be issued. The fees will be outlined in it, any notable changes, and then there's a bunch of standard boilerplate wording in there that comes from the state society or the AICPA that is required to be within the engagement letter. So it's a standard contract. Again, if we do encourage our clients that if they do have HIPAA-related issues or FERPA-related issues, and the auditors will be looking at some documentation. You may want to get the auditors to sign a business associate agreement as part of this.
All of that concludes getting new auditors or retaining auditors. So you as an audit committee, you have other roles though. It's not just about hiring and firing auditors. It's about meeting with them once they are the auditors. So really how that takes shape more often than not is in pre and post audit meetings. And on this page, we're going to go over the pre-audit meeting. Really, ideally, you want to meet with the auditors sometime before the audit starts, obviously. Also, maybe around year end or maybe slightly after year end. So this way you make sure that you are fully informed about what happened at your organization for that year, and you can convey that to your auditors. What you really want to discuss, usually you go over the prior year results just to refresh everyone's brains about what took place in the prior audit, whether it was with the existing firm or a prior firm. What were the financial results? What was the financial standing of the organization after that? Were there any significant one-time events that happened in the prior year? Were there any changes or anything like that? You also want to talk about, most importantly, what happened in the current year that will be under audit. So were there any operational changes? The auditors need to know about that and be armed with that information before they start the audit. Are there new programs? Are there losses of programs? Are there financial strains? Are there financial windfalls? All of this affects the audit. Were there changes in the organization staffing? Are there new bookkeepers? Are there new leadership? Is there new board? Is there new IT systems and processes and all that other stuff? Changes trigger actions from audits. So your organization is pretty much status quo and not changing. The audits may feel slightly similar, or they certainly will feel similar with slight differences year after year. But if there are major changes, so too then the audit may have some major changes also. There may be external changes from regulations from the outside world. Maybe your organization was audited by government bodies. Maybe there was findings there. Maybe there were takebacks of dollars that the auditor should be aware of. If there were frauds, certainly have to let the auditors know, because they will probably look more deeply into those areas to see what gave rise to those frauds, and they would have to adjust their own work plan there. If there's litigation, auditors should know about that, because that could have potential disclosure ramifications. It could have liability recognition ramifications too. So you really want to share as much as you can with the auditors, because it makes them more efficient in what they do and more thorough, and make sure that everything that should appear in your ultimate audit report and your financial statements does. If there's new accounting changes that took effect during the year that management has implemented, you'd want to speak with the auditors about that. Likely they'll be asking you about that, and you'll be responding. And then obviously go over any findings that you had from the prior year. So if there were a lot of findings and a lot of issues, maybe systems and controls weren't up to snuff, what took place in the current year to address those, if anything? The auditors want to follow up on any corrective action plans that may have been implemented in response to past findings. And if they weren't implemented, you probably have the same findings in the current year, but you want to at least give the opportunity to the auditors to understand really what happened and how you addressed them or didn't.
One of the things to keep in mind in that pre-audit meeting, the Nonprofit Revitalization Act requires that if an organization is generating over $1 million worth of revenue in a New York-based organization, they're required to have that pre-audit committee meeting. And it's amazing, a lot of our clients do not have those pre-audit committee meetings, even though we kind of stress that they should. So then after the audit is over, you have the post-audit committee meeting. And here, again, you're looking at going over what the auditors found during the course of the audit. One of the things I can tell you is that you want to make sure you dedicate enough time for this discussion. A lot of times, especially when the audit committee is an audit committee of the board, and the board is doing it as part of their normal board meeting, they're not allocating enough time to go through this report and really get a good understanding of what transpired during the course of the audit. I think at a minimum, you want to try to dedicate a half an hour to this, and that's at a minimum. I actually have gone through meetings that have lasted an hour, hour and a half, 2 hours, depending on the information we're going through and making sure that everything gets fully vetted. So the more time you can kind of devote to this process, I think the better off you're going to be in terms of allowing or developing that good open rapport. So again, things that the auditor should go over. They should go over the financial statements or financial analysis. Again, as Matt mentioned earlier, it's not so much going line by line through a financial statement. I kind of think that kind of gets boring, and you start to see people's eyes roll up in the back of their heads and they start to drool and their head hits the table. I mean, really what you want to do is you want to try to kind of present more than just, the black and white of what's on the financial statements. You want to kind of show trend analysis. You want to benchmark against other organizations. You'd really like a little more insight. The reason you hired the auditing firm is because of their industry knowledge. And you'd like to kind of have some of that industry knowledge come through within that presentation process. What are the key factors that we should be thinking about? What recommendations do you have? Those types of things. There's certain required communications known as the SAS 114 report. The auditors will go through those required communications. Again, in the interest of time, I'm not going to go through what those required communications are. Management letter, again, as Matt mentioned, that should only have significant deficiencies or material weaknesses outlined within it. Any other findings that we would have would go through that required communication report. And again, in terms of if there are no significant deficiencies or material weaknesses, there won't be a management letter. And don't look at a management letter as a negative thing. Sometimes, it's just a healing process. So a lot of times when you bring on a new auditors, they may be looking at things a little differently and the like. If there's a uniform guidance report, again, over $750 worth of federal funding, that would be discussed. You should be reviewing your tax filings, pension. I mean, one of the things that we see all the time is, we'll do a regular financial statement audit and we'll do a pension audit. And there's a big discussion about the financial statement audit, but there never seems to be any discussion regarding the pension audit. And when you're looking at the pension audit, you got issues like benchmarking, reviewing of investments, compliance with DOL regulations and things like that, which really the audit committee, who's responsible for risk with respect to the entire organization, should really be gaining a better understanding of and make sure that conversation is taking place. So again, it's something that, if you're not already talking to your auditors about, you may want to add that onto the calendar of things that get discussed.
And finally, assuming the audit committee approves of the reports, the financial statements, the management letter, the taxes, things like that, there's the opportunity to present that to the board. Every audit committee seems to operate a little bit differently. Some are the ones that have ultimate responsibility and final say over the financial statements. So if an audit committee approves a report, we can issue everything in final form and it's done. Oftentimes, though, the audit committee has to present that to the board and the board will vote on it, and then we can finalize and it'll be done. I would encourage you that your auditors probably should speak with your boards too. So you as the audit committee are certainly working on behalf of the board. You're principally responsible for the audit, but I think it's good for the board to hear from the auditors directly. It gives us as the auditors the opportunity to really communicate anything positive or maybe room for improvement to the board so that they're better informed about what's going on. We can talk about the financial position of the organization and what happened during the year. Your auditors, they should be financial experts. They should be good at communicating that to non-financial people. So the board is usually comprised of very non-financial people, or at least a smattering of people, some of which may have financial backgrounds, but most of them don't. So I think it's important for the auditors or whoever to really come down and speak to them on their own level about this, not in a patronizing way, but certainly in a more educational type way. And that's something that I think is very important. And then obviously the board usually has a recommendation for approval or vote, and then that really sets everything off from there. What's not on this page, but I guess should be, the board is responsible for reviewing the 990 also, the IRS Form 990. There's a question on the 990 that asks, does your board review this tax return before it's filed? What's their review process look like? So at a very minimum, the board should be getting the 990 before it's filed. The board members should have an opportunity to review that thoroughly, to come back with any questions to either the audit committee, management, or the auditors themselves to make sure that they feel comfortable with that tax filing before it's actually made. This way that question can be answered honestly in the 990. And you really don't want to mark no to anything in the 990. There's really no penalties associated with it, but there may be some sort of negative connotation associated with that. So just make sure the 990 is definitely at a minimum being looked at by the board, if not everything else.
One of the things I didn't mention in the previous slide, which I wanted to, one of the things that when you go through that final meeting with the external auditors as an audit committee, you should also allot a little bit of a period of time where the management leaves the room or management drops off the call, so that you have good, open, candid communication with the auditors without management in the room. so that if there are any issues or any concerns or any things that you want to talk about, that communication can appropriately take place, again, without management in the room. So again, I apologize. I know we went over by about 20 minutes. We sent out an evaluation form to everybody. Please take the time to fill out the evaluation form. I know there's a question about appropriateness of time. We failed on that one. I get it. And I hope to see everybody on at our next presentation, the third part of this installment, on November 4th, where we'll be talking about the internal communication and talking with your internal staff and what level of communication should be taking place there. So thank you for everybody for participating, and see you next month. Take care.